What's your reaction? Is that enough to go, all right, let's get going, let's take on more risk, or do you have to wait for it to filter through?
Look, China is definitely in deceleration mode. We all know this, and I don't think this changes the forecast. This year, growth will effectively come close to 6% from what 6.6% last year. But I don't think we should be surprised by stimulus. It's both fiscal and monetary, more tilted toward fiscal. And the expectation that we maintain of a trade accord with the U.S., I think, will mean that China will kind of have a stable year. I think that's good for commodity demand. I think that's good for emerging market risk. And it's certainly good for global growth.
Okay, so Sarah, I'll put a chart up here that indicates just exactly what Kathryn was saying and the extent to which it's really declined. We've had a decline actually in the growth rate in China, and this is according to retail sales, industrial production, fixed asset investment. Although investment in real estate has just picked up. What do we need out of China? I mean, is it stability? Is it just not growing any more slowly, or just changing the curve? What do we need?
Well, I think there's been a lot of concern for a long time that China was going to slow because it was growing at such a faster rate than everybody else. I think that what you want to see is what you're seeing, which is the government wants to support growth. It wants to try to put pro-growth policies in effect. It's a little difficult in a top-down economy to understand when they say we want to create this many million jobs, we want to create 13 million instead of 11 million. It's a little difficult to say, okay, how do you do that when you are asking the companies basically to hire more people? But I think the fact that they're looking at using their reserve ratios and using those stimulus policies that they've had before in the face of the fact that it's slowing is positive. I think the tricky thing is, given the fact that you've got all these trade concerns going on, how much is that a factor in terms of their own, the same way that we talk about it here, how much is it a factor there in terms of their own business investment for themselves as opposed to just foreign investment coming in there? So I think that there's a lot of things going back and forth, and I think that some sort of resolution on trade, which it doesn't sound like, it sounds like it's getting pushed out a little bit again, which is not a huge surprise, that I think would go a long way to making people feel better. But in the interim, you want governments to sound like they're being supportive.
So, Kathryn, for you then, what's actually priced in? Like you said, we kind of knew that the stimulus was going to be coming at some point. We know a trade deal is probably going to come at some point. What's priced in, what's not?
Well, I think a lot of optimism is obviously priced in, Alex. Look at Chinese equities. That's our top recommendation for this year. We did expect some form of trade accord when it wasn't consensus. Now it's increasingly so. And now Chinese equities are up in 30% since December. So certainly a lot of optimism is priced in, specifically on the trade accord front. With fiscal stimuli, and I'll also take a tackle to the question that David answered as well, which is really what do they need? They need an opening of the economy. So they're talking about putting foreign investment on the same plane as domestic investment, but domestic private investment isn't on the same plane as state-owned enterprises. So really you have a segmentation of the economy. Because this is a communist regime, we can't forget that. We cannot forget that. So as unemployment ticks up, the social contract between the Chinese authorities and the Chinese people deteriorates. So stimulus is required, because as people feel that they don't have a job or they risk their job, they need to have some assurance that that could come in the future if their rights are going to continue to be repressed.